Hello and welcome to Enrich Academy. This is Nancy. Today we're going to have a brief outlook on crude oil. So what is crude oil? Crude oil is called black gold as it has made many countries powerful. The Arab countries, which were once desert lands, have become rich and prosperous because of this crude oil. We all know that crude oil is a natural resource, but it varies in density and consistency. There are more than 160 different oils traded in the market these days. Let's discuss the three major oils in the market. The first superior crude oil is West Texas Intermediate, or WTI. It's a premium quality in the United States. The sulfur content is 0.24%, and that's why it's easy to refine this crude oil. The essential product that we can get from this oil is petrol fuel. The second is Brent. Brent crude is in fact an amalgamation of different oils from various fields from the UK. It contains about 0.37% sulfur, which makes it a sweeter oil than WTI. It is used to set the price of 2/3 of the world's internationally traded crude oil supplies. And the third one is opaque crude, which is a combination of 13 different countries like Algeria, Angola, Iran, Iraq, Kuwait, and the other countries as you can see on the screen. OPEC stands for Organization of Petroleum Exporting Countries, and it was formed in 1960. Because opaque oil has a much higher percentage of sulfur, it is not quite as sweet as WTI or Brent crude, and the prices of opaque oil are generally lower than WTI and Brent. Now we need to know the top oil producing countries and the top oil consuming countries. According to the 2019 data, the top 3 oil producing countries are USA, Saudi Arabia, and Russia. The top 3 oil consuming countries are USA, China, and India. So the question is, how many barrels of oil do we consume in a single day worldwide? Well, it's surprising to know that the consumption rate per day is 101 million barrels. However, due to the effect of COVID-19 crisis, all these barrels are held up in various warehouses and ships across the world. We may have many questions in our mind. On what basis are the prices fixed? What is the cause for the drop in crude prices? Who were benefited by the price drop in crude? Who were impacted by this drop in prices? And where the end users benefited or not? Well, the answer to all these questions are connected to several factors on which the crude prices are fixed. So let's look into the 3 major factors that fix the crude oil price: supply, demand, and geopolitics. Oil is undoubtedly an extremely essential commodity for the world economy. So the global economy will have a major factor on fluctuations in the oil price. Clearly, there's a lot of demand for oil, so the price is expected to climb during good times. But what happens during global recession? Production decreases, resulting in less demand for oil. So that's a simple demand and supply equation over here. Now, in the initial stages, the production and supply of crude oil was more in the OPEC countries. In the late 90s, the production of crude oil was more in the United States after the shale revolution. Because the production was more, the price of crude oil had decreased. In order to control this, OPEC countries and Russia took several initiatives, and discussions were carried out to make the production equal between OPEC countries and Russia. However, Russia did not accept this condition. This caused a price drop of 30% in a single day, and trade took place at $35. Similarly, the US has also been producing more oil. Whenever the production is high, the prices come down. So although there's supply at one end, does it have demand for the same? Well, crude oil will always be in demand, and it will always be called as black gold until an alternate energy source is found. Because the basic component required for transportation and industries all around the world is crude oil. So with the equation of demand and supply, less demand normally means the price would start to drop. So the global economy and things like trade wars are a huge factor when it comes to the price of oil. As oil is produced in various regions around the world, there could be political uncertainty. For example, the first Gulf War in the 1990s, we saw the price of oil soar while the production had decreased. In 2003, when US had waged war against Iraq, the Middle East Union produced a lot of oil. This automatically led to the fall in prices. Recently, we had seen when President Trump withdrew Iran's nuclear deal and when the oil export sanction was registered, the price of crude oil had increased. Hence, what we need to understand from this, oil market will definitely have a massive impact on the world economy, budget, and politics and will be a powerful source. And these changes would definitely continue to be so in the future as well. Now let's look into the reason for the fall in prices during this COVID-19 period. The entire world is under lockdown due to Corona. There is no demand in the market, whereas the production and supply remains the same. Oil production can be reduced, but it can't be stopped. So why can't the oil production be stopped? Well, there are several reasons. If it's stopped, it would result in huge unemployment. Once it's shut down and later reopened, the expenses incurred for repair and maintenance would spike up drastically. Oil wells also can't be closed like the water wells because the depth would be from 4,000 to 40,000 feet below. Now let's have a close look at the reasons for the fall of crude oil. For the past 100 years, we know that the United States has been the most powerful and dominant country around the world. And it has also the authority to place economic barriers on other countries. US has already placed economic barriers on countries like Cuba, Venezuela, North Korea, Syria, etc. Now, because of COVID-19, the economy of US has begun to fall. When compared to other nations, the number of cases is the most in US. The impact of this can be seen on the entire economy. On one side, there's no proper leader to administer this issue, and on the other hand, making use of the occasion, Russia and China are giving it a fairly good try to overtake US to emerge as the most powerful nations. To add on, they have also started investing in the shares of many companies. Well, the United States in this case will either try to retain its power by utilizing the resources available within the country or by crushing down the other competing countries. In the present situation, by waging war against a country or by placing economic barriers upon other countries, it cannot see the downfall of other countries. Because if they do so, they will have to face the after effects later on. It has to witness the downfall of the economy and trade of other countries to remain powerful. The result of this is the negative trade that took place in the crude oil market. Now, the point to note is, unlike Arab countries, the sole revenue of the United States is not dependent on crude oil alone. Although they are number one in WTI crude oil, they do not hold the first position in the export of crude oil. They can maintain their economy even without the revenue generated from crude oil. So, many countries may think that it's a huge blow to the US, right? Unfortunately, it's a huge blow to the OPEC countries. You might also feel now that this would have been the objective of US to bring down oil prices to negative. It might also look as a master plan by the US. In fact, there is a rule that crude oil trade should be carried out in dollars only. But for the first time in history, using future trading as a platform in commodity market, US could have made the trade of crude in negative on 20th April 2020. Starting from $20, the trade went down to minus $40, which was never seen before. From the perspective of traders, the supply of crude oil was more in the physical market. Unfortunately, there were no buyers. Even in a situation where crude oil barrels can be provided free of cost in the physical market, during the expiry date of the contract in future market, there was no way for the market to be positive. There was an expectation that it would go till neutral, but no one expected it to become negative. Using this, future trader did short selling in the market. Because of this, the April month settlement contract of crude oil was done at minus $37. So if such a scenario exists in the market, that will be a huge blow for OPEC countries. If the supply remains the same without demand, it is possible for the trade to go again in the negative. Also, during this economic shutdown, you can expect the price of oil to have a major downtrend. So the only solution is, the sooner the lockdown crisis comes to an end, the faster will be the recovery of crude prices. So what has been the impact on the Indian market? The Indian currency holders did not gain anything because of this drop in crude oil price. Although crude oil is available at a less price, we cannot store it because of the storage limitation. It can only be stored for 87 days. But this is a good opportunity to reduce India's price inflation. By imposing more taxes on crude oil, the loss occurred due to the impact of corona on the crude can be rectified. The end users will not be affected much, and because of this, there will not be much fluctuation in the prices of petrol and diesel. By now, I hope you've gained a fair knowledge of what crude oil is. If you found this video beneficial, please do share, like, and subscribe. This is Nancy signing off from Enrich Financial Group. Thank you.